short US dollar here, right? Short US dollar or short US equities?
Equities.
Short US equities. You think we're done?
Yeah, I mean, I think the argument here is that in a raising interest rate cycle, you essentially have liquidity that tends to be withdrawn and equity risk premium that tends to expand, particularly for small cap in the US. And this is essentially one of the key premise of this argument, is that the US equities have had a tremendous performance over the past few years, driven by the liquidity, the monetary policy of the Fed, and we just see better value elsewhere in Europe and in Japan.
And you're very specific here. Tired buyback basket. So companies specifically that have already engaged in buyback programs would be a target?
Correct, but those companies with weak balance sheets. As I mentioned a few times earlier, a buyback only makes sense if your earnings yield is above your after-tax cost of debt. And that's sort of a simple rule for buyback, and that's called earnings accretion. And what we have seen in our analysis at Société Générale is that there's a group of companies who have weak balance sheet but use buyback to prop up their shares. And as the cycle turns, because we've talked about cycle a few minutes ago, these companies will be the one most vulnerable to the turn in the cycle, and these shares will underperform. So we've constructed a thematic basket of these carefully selected companies that we like to short against European equities, for example, or Japanese equities.
Can you tell us where to look, or can you tell us the names, sectors?
Well, it's actually a good mix of sectors. So you have energy, you have industrials, and healthcare, etc. So it's actually not sector specific, and it's pretty well diversified, which we think is important.
The other call you have is long large cap Europe, which I think is interesting because if you look at the performance across European markets, it's just the DAX that's still trading higher than the October lows. The rest of the other indices across Europe are well and truly below what was meant to be a trough in 2015. Does that mean we're almost done on some of the selling here in Europe?
Yeah, and I think this is a very good question. And the reason why we like large cap in Europe is this is essentially the Euro stocks, is because a lot of the large cap in Europe are European banks and insurance, so the financials, and they've actually suffered and underperformed over the past few years. So we're calling for a turn or a pickup in the second derivative of the growth in the Europe story. So it's more domestic Europe as opposed to the exporters theme that the DAX was benefiting from, a lower euro, higher exporters, autos that we talked about. So we are essentially going long the euro stocks and short the DAX to play banks, domestic economy, momentum with the consumer, etc., against the theme of selling and exporting to emerging markets in China.